Good morning, good afternoon. Welcome to Develop Your Edge with Anthony Crudelli. I'll be your co-host, Tom Schneider, CMT with NinjaTrader. Before we get into this week's contents, I do want to remind everybody that futures and options trading contains substantial risk, is not for every trader. You can potentially lose all or even more than all of your initial investment. That's why we recommend you use risk capital. What is risk capital? It's money you can afford to lose. Doesn't extend your retirement horizon. Doesn't keep you up at night. Also want to remind everybody that past performance is not necessarily indicative of future results, and what we talk about here on the show contains neither trade recommendations nor financial advice and should be taken for educational purposes only. And with that out of the way, it's my pleasure to welcome Anthony back to the show. How you doing, Anthony?
Great, Tom. Welcome to the month of December.
Yeah, yes. We had last week off because of the holiday. Did you have a nice Thanksgiving?
Oh yeah, it was great. I'm still shaking off the cobwebs, so I can tell you that. I had family in, food. It's like I'm in full holiday mode right now.
That's awesome. That's awesome. Yeah, we just finally got rid of our leftovers, and that's the best part for me, Thanksgiving leftovers. Well, and the family, that's good too. But yeah, first of the month, first of the last month of the year, a lot happening, right?
Yeah, I put a tweet out this morning talking about how the first day of the month for me historically has been one of my most difficult days. I remember looking at my stats, years into my trading and looking at the first day of the month, and I would just see really just poor trading. And I was going back and I was thinking about, is it just me trying to get ahead for the month, right? The first day of the month, psychologically, it's the first day. You want to start off on a strong, note, and you want to get going. I think that definitely plays a role in it. I think the other thing that plays a big role in it is when I went back and looked at my strategy, I'd always look at it and say, you know what? It just doesn't seem to work as well on the first day of the month, regardless of the environment. And I used to be like, why is that happening? And then, having a pit background and understanding how the first day of the month is really a day where there's more people that are trading that have to do something than want to do something. So when you look at a technical strategy, a lot of it is, well, we got to this area. I want to participate. I don't want to participate, right? There's more of that choice. When you look at the first day of the month and the last day of the month, there's a lot of flows that come in of I have to do something. And so that creates a lot of misreads when it comes to technical strategies. So I think that there's a lot of just factors that come into play. And I would say even specifically December, funny enough, I traded this morning, I'm down. I luckily I've got this show so I can come in and minimize my downside. But, it's just a tricky day. Of course we're going to go to the charts, but I just think that when you look at the first day of the month, everybody, go back and do your homework and look and see, what was happening. And I think that there's just two things always at play. Psychologically, you try to get off to a strong start. And, lo and behold, you try to make money in this business. A lot of times you end up losing. And you also look at where your strategy is reacting to the price. The price action, a lot of times you're going to look at it and say, man, it's just not respecting my strategy. And so I think it's a combination of both things.
Well, and Anthony, that's a great point. Technical analysis in my studies is based on human behavior, and what you're
Yeah.
pointing out is a variation of human behavior, right? If that whole idea of want versus need, if there's a strong need, if there are these positions that need to be put on the first of the month by big institutions or even by hedge funds, whatever you want to call them, that's not respecting, maybe, or it's a different kind of human behavior that the technical analysis might not anticipate.
Yeah, that's a great point. And because, like we said, it's when big players have to do something that moves the market in just a different way than you're used to seeing. A lot of times you're looking at the market action, and a lot of it is, what do I want to do? Do I want to participate in these prices? And on the first day of the month, last day of the month, specifically on the opens and the closes, it's just like, I got to buy them. I got to sell them, and they're just wiping the book out. And so therefore you have this, like I said, this misread of what's happening. And you could think, oh, that action's going to follow through. And then a lot of times it doesn't. And all of a sudden it'll come in with spurts, it'll come in just bunch of buying, bunch of selling. You're like, okay, now it's going to happen. And then it just falls flat again. And also what's interesting is when you have a first day of the month on a Monday. So Mondays are also historically for me struggling days because you come off of the weekend, especially coming off of like a Thanksgiving weekend. You come off and you feel fresh, but you're just a little slow, right? And the first thing you do is you say, I'm going to be a little bit patient and you wait. Then the market moves in a direction. And typically, as day traders, your first thought is, well, I have a setup to fade this morning move. And then all of a sudden you have a move that's being faded, right? And then you try to fade this move. And then a lot of times historically, you'll see one directional moves on Mondays. Look at market crashes have been known to happen on Mondays. I've seen a ton of melt ups on Mondays because you get this mindset of, oh, I missed this morning move up. It's probably able to come back in and it just keeps going. And so psychology plays such an important role in these types of days. And going back to what you said and how it reacts with technical analysis, and you have to recognize that, you have to be aware of that, because you and I have talked about this many times. There's a big difference between executing a strategy and being a trader, right? If you're just going to come in and just blindly execute a strategy, then maybe you should just be automated, and maybe you don't need a point and click. But if you want to be a trader and you want to excel beyond what your strategy is giving you, you have to be cognizant of these types of days because it does matter. It does play a role.
Yeah, and we might be seeing that today, this morning. But the idea that we're expecting one thing and something else happens, we don't have an explanation. We're looking, to take that point, this morning, a lot of news came out, right? So as a trader, you'll want to be aware of that news. But there is a big move with no news behind it, and it's almost the biggest move of the day, and you're wondering, why is that happening? And it could be based on these big needs for these big players to do something.
Yeah, no, 100%, right? I mean, when you look at the data, I mean, right now we're so reactive to data. And I actually did a whole podcast yesterday about what's more important, price or news, right? And one of the common things that we talked about in the podcast was that everybody's reacting to the news after it happens. I mean, none of us as traders are really going into the news with any positions. If you're a new trader out there going into news with a position, that's going to be a tough life for you. But you know, obviously the market's always looking forward, right? And we've had some data and some things that have come out, and then tomorrow's unemployment as well, right? So it's just one thing after the next after the next. And when you have seasonality, you have first day of the month, last day of the month. I mean, I'm the first to tell you, like I struggled the last couple of days. I mean, it's so tough because we're going to talk about this a little bit today when we get into position sizing. And luckily, my losses have been relatively small, but still, nonetheless, I'm losing. It's just that the action's so hard to interpret, right? I mean, we want to try and find all these different reasons and point to certain things. And right now, the market is in we're in a place where we're between a bull and a bear market. I mean, let's just assess the context of the situation. We're going to go to the charts. You're going to see we're near the 200-day moving average in the S&P. We're near the daily downtrends in all the markets, right? For going back for the year, right? So there's two big key technical spots that a lot of these trend players are looking at. You're coming towards the end of actually the futures. You're getting into rollover in next week, right? So you're going to start to have expirations. This week is rollover for, if I'm not mistaken, it's this week. I think it's rollover for treasuries and maybe some currencies. And you have all of these rollovers in commodities too. So a lot of people that are new to futures, you're realizing that we're coming into a rollover time where we're now moving months. So a lot of things are expiring with a lot of data points, right? There's so many push and pull factors right now that you might be struggling and you think to yourself, well, is it me? Is it the market, or is it the environment? And I've talked about that a lot in here. Every time there's something going on where it's like, I'm not making money and I'm not making money right now, I look at it and say it's the environment. Of course, it's always comes down to us, but I look at what's happening, like the trades I took, and I'll actually show them here in a little bit. They were trades I really liked, but at the end of the day, they just didn't work out. But it's just because I look at the whole context of the situation. In reality, is it's like how do I really have any expectations for my strategy to do really well in this type of environment? And you just have to lower your expectations. and that comes into like position sizing. And so actually, I think we've been doing this Ask DYE, and this week I know we're going to focus on a question. Maybe if we could pull that up, and I think this is such an important question, and I'm going to pull this in to what we're doing here today, and I can't really read the question. I got
Yeah,
it scroll on the screen. Maybe you could read it, Tom.
yeah, I can read that. That's fine. So we got a question from Diego that says, "How do you determine the amount of risk you're willing to take on per trade? And is it a fixed or is it fixed or variable depending on what?"
Yeah, and that's a perfect question for what we're talking about right now, right? What is the context of the situation? And that will determine my risk amount. Now, depending on your account size, I don't really have a percentage term. A lot of people will say, risk X amount of percentage and stuff like that. For me, I really go off of, and my risk is going to be, now, mind you, I'm a lot longer in my career. So maybe I take it back a little bit to kind of more of the beginning, like how did I determine how much I was going to risk per day? And I really was set on, risking, something like $500 in a day as a futures trader to start. That was really my initial risk point. And that number just came about because it was how much, do I feel comfortable that I could make in a day? So it was really not a matter of my total account size. It was a matter about how much I felt comfortable that I could make and what I was also comfortable losing. And it came down to how much could I risk per week? How much could I risk per month? So it wasn't really necessarily a daily thing, because the day risk was not as important to me as like my weekly or monthly risk. Because if you get into a situation where your daily risk is, let's just say $500, does that mean that you're comfortable losing $10,000 for the month in 20 trading days? If you're not comfortable with that, then your risk per day is too high, right? Because you could definitely lose, 2/3 of the month, right? And so you got to know that even if you're right, you could be losing in the vicinity of 5 to 10 grand on a $500 a month or $500 a day drawdown. So my daily was kind of spread out between what my weekly and monthly would be. And it would come down to the context of the situations once again. And you can adjust this to your account size. I mean, the one thing that's a little bit different, I should say, that between futures accounts and, let's talk about stock accounts, right? Like a stock account is not a leverage account. Futures account's a leverage account, right? So a lot of people are coming in with that leverage. They want to come in and they want to put a small amount of money in. And so they're actually risking a higher dollar amount per amount in their account. And that's the same with me as well, no matter how long I've been doing this, because I'm not going to put up a bunch more money, because you're already getting leverage, you're getting day trading leverage. So that's why I don't really put the percentage on it, because somebody might have $100,000 and puts $10,000 in a futures account. And they say, well, I'm going to do that because I get the leverage. So that's the reason why I don't say percentage versus a stock. So it is a little bit different. And you just got to be smart about it, right? What am I comfortable with? And what is the context of the situation? So let's go to the charts. And what we'll look at is, for me, how I'm going to put it in the context of a situation, right? We've already named a bunch of things. I'm not going to go back and talk about all the different things we named. And we know that this is a push and pull environment. So we already know we're starting off in a time where I'm not fully convinced of, of what the direction will be, right?
Right.
So now we come and we look on a technical basis. You have the 200-day moving average, and I just have a blank S&P chart up here. I have the RSI, basic settings, and I drew a trend line. And you look at the trend line today, it's pretty much the high of the day. And the 200-day moving average is where we are right now. So now you have the trend players that see a daily close above the 200-day. And then you see them hit a downtrend for the year that we've hit multiple times. So it's like, okay, who's winning the battle on the trend? What is the trend? You've got higher lows and higher highs when you go back from October. You've got lower highs and lower lows if you go back and stretch it out to the beginning of the year. So what really is the trend? Right? We just don't know. So when I look at it first at the S&P, I go, okay, we're just at this critical point of time and price, right? So that's important. Time and price of critical moments, not to mention all the data, right? So I've said a lot. I mean, maybe we bring you in here, Tom, for a minute, just to kind of maybe digest what I said, and then maybe we'll go a little bit forward.
Well, I completely agree with what you're saying in terms of interpreting the chart. right? We've got a shorter term uptrend, we've got a longer term downtrend, and you've got the trend line, the moving average at critical points, right? So is the moving average going to act as support or resistance? It's still a toss up in my mind, right? Because we just peaked above it. Could that be resistance? We turn around. It is kind of I won't say a confused market, but it is something that has the direction isn't quite clear.
100%. And so as a day trader, think about this, because that's what we're talking about here, day trading futures. How are you going to pick the side of the market that you want to be trading more aggressive or less aggressive? Because that's important. Talking about the question, how do I know how much I'm going to risk per day and how am I going to determine position size? Well, if primary trend is down, so like let's just say, let's move forward a little bit. Let's just say in a few days from now, we fail at the daily moving average. We fail at the 200-day, which I think is probably the likely scenario. Now, I don't know that it will happen, but I think that is probability says that that's probably what's going to happen because we've been in a downtrend. And we start to have multiple daily closes below the 200-day. And all of a sudden, I look at everything. The RSI maybe gets overbought, and then we start to come back down. Now I say to myself, okay, Anthony, that trend is held. Let's look to start being aggressive to the short side. So my risk per day on the short side is going to be a little bit heavier because I've now have multiple days of confirmation of time and price, and maybe some of the data is behind this, right? So now I'll start to look at the situation and say, I will start to trade solely to the short side. And if things start to work and my strategy is reacting well to the market, then I will, as I'm making money, I increase my position sizing, I increase my risk per trade. Now I do that because I think most people do this backwards. And I know that they do it backwards because I did it backwards for a long period of time and it just totally frustrated me. Most people will put on their biggest positions when they're closest to blowing out. So when they're at the point of look at, I can't make money anymore. I'm so frustrated. It's almost like a cry for help. You're like, hey, just get me out of this, right? They just want the pain to go away. That was me. I put in my first account, I had $25,000 in it. And I was an unbelievably great risk manager. When that account got below 10,000, I was the worst risk manager you've ever seen in your life. And it was really because I'm just so scared I'm going to be out, or like the pressure just gets to me. Like, how do I make back this money to get back to 25,000, that I would just throw money away and I would get more aggressive as things weren't working. But when things were working, when I had that $25,000 account, I'd be up $500. I'd take it and leave and be like, oh, that was a good day. And I would just stop. And I would go back and look at it and go, Anthony, you were never making enough when you were doing well. And then when you started to do poorly, all you did was throw money at the market because you're like, it's a cry for help. I need to make money now. And this is what happens, I think, with most traders. And so what I started to do was, look at, when you're doing good, you got to keep doing good. So you increase it and you do it. Now, there is a way to do it to where I will, I like to scatter my risk around, right? So as I'm adding, so let's just say that I put a position on and I add to it. Well, that's a new trade. So that risk is additional to that other risk. So I'm managing each ad as its own risk per trade, right? So let's just say I'd originally had $500, then I add to that position. Now maybe I'll add $200 of risk, but I've already got some winner on with the $500 one, right? So I'm kind of rotating in and out of a position, trading around what I would call a core position. And it gets pretty advanced as you do this, but you're adding to that risk, but each part of that ad is its own risk. And that's the way I do it. So like a lot of, like, even this morning, I'll actually go and show you some of the things I did in the NASDAQ in just a moment. But like today, I added in multiple different times, and each one of them was their own risk per trade. They all got stopped out, but that's a different story. But the point of the matter is that I did it because I wanted to scatter my risk. And maybe 2/3 of that position didn't work, but then the 1/3 that did, I would ride it. Maybe it would make it back, or maybe it'd make it more, right? So that's the way I do it.
And
Go ahead,
Anthony,
Tom.
you can't do that when you're down, right? So the thought is, when you're drawing your account down and you're getting desperate, the market doesn't care about your desperation, right? You're trading from a standpoint of, I've got to make back what I lost Market doesn't care about that, right? And so you're changing your strategy, or you're ignoring parts of your strategy out of desperation. And that's a different discipline than, hey, I've got a winner, and rather than just taking the winner and saying I'm done, you have to change your discipline to improve that winner, hopefully with possibly taking on extra trades. So it's two different things,
Yes,
different disciplines, but they both are called on because of the situation you're in.
exactly. And like today I talked about, I scaled in with my stuff in the NASDAQ. I actually use the micros. I use the micro NASDAQ a lot. And the reason why I didn't continue to trade was not just I was joking, kind of like I was going to come on develop your edge, but it was also because I knew the context of the situation is like, it's just, if that trade didn't work, I'm just done. Like this is a crap day then. I don't need to participate in it. Now, if it's a day where I felt really strongly about the trend, like I kind of moved forward and said maybe I wanted to be short or something was strong, I actually trade NASDAQ long today, that would be different. I would probably continue to trade, right? Because I would be like, look, at my risk per day is a little higher here because I have conviction. Today, my conviction is low. So I actually just stopped after my first scales in and out. I mean, I was like, that's it, I'm done. It's like, what am I going to do? Sit here and just keep feeding the market money? And I'm glad I did, because I would have continued to lose. Let's bring it back to what's happening on the daily here. Let's go back to the charts. And so one thing I looked at this morning, and I want to quickly go over what I did and why I determined to trade the NASDAQ. S&P was right above the 200-day, near the downtrend. It's like you look at it and go, it's trapped between the two. Probably more unlikely I really am going to really feel any good about either side of the market that I'm on based upon what it did on the open. And we go to the Russell. The Russell's had multiple times where it's been above the 200-day moving average, kind of near the daily downtrend. Once again, when you look at it though, there's so many tops up here. I'm like, man, there's just not a lot for me to do today. Probably expect this to be a little bit choppy. That was my thoughts coming into the day. RSI is not quite near overbought, could easily blip up there, but easily could come back down as well and test the 200-day again and just extend the time that it's staying above it. So who knows? You go to the NASDAQ. NASDAQ is not to the 200-day and it's not to the downtrend. So I looked at it and said, okay, if the NASDAQ, and you can see here, it's obviously been one of the weaker of the markets. This is something that's just an old line. Delete that too, just so it's not confusing. And I looked at the NASDAQ and said, look, if we're going to go up today, because the momentum's up, I'll dabble with the NASDAQ because the NASDAQ has the most upside possibility, and I could probably manage my risk in the short term to the downside. So I looked at it and said, this is where, as the index, I have the opportunity. So it was like the daily set up, and I just knew the S&P and Russell most likely are chop fest. But the NASDAQ represented a possibility of maybe a continuation to the upside. Maybe it plays catch up today to catch up to the daily downtrend and the 200-day moving average. So then we go to my 3-minute charts here. And everybody knows I talk about the 3-minute chart all the time, okay? And every time I talk about the 3-minute chart, it's pretty simple and basic, right? 3-minute opening range, right? Actually, it was up there. It was a really small opening range today in S&P. And when you looked at the S&P, I have the auto-anchored VWAP, which we've talked about this before, many episodes. Not going to go into this today. You can go and look at previous episodes of Develop Your Edge with Tom and myself to see this. Cumulative delta. I looked at everything and said, opening range is tight. Order flow VWAP is right in the middle of opening range. It actually just got below it, right around it here, which now represents a bearish type day. But in this moment, I was looking at it going, confirms with me on the daily total chop fest, right? Let's go to the Russell. You look at the Russell today, had actually a very big opening range. And look at that order flow VWAP is still inside the opening 3-minute range, which anytime, if you're new to the show, what it indicates to me is that if you're in between the 3-minute opening range high and low, and the order flow VWAP is in between it, and that's why I draw those two lines, it represents a sideways type day to me. So I don't like to trade those types of days. It's going to be choppy action, and you can look at the delta is pretty much neutral. It's negative 500 something, 600. So it's nothing. I mean, it's just a nothing day. I mean, it's most likely going to continue to be a choppy day. So why would I trade it, especially after what I saw on the daily? Then you go to the NASDAQ, and this is where the NASDAQ got me caught today, right? So here was the opening range in the NASDAQ. Opening range, it broke after that 3 minutes, but then rallied up, and the order flow VWAP came up strong. See how it made that higher high right in there? And then you had the order flow VWAP come up. So what I did was I stepped in and I bought it here. I bought it at the top of opening range, right? I did rotate out of some winners here, but I continued to add as it started to come in here. And then it tickled me out, right? I had my stops right below here, the 1 standard deviation, and that's where I got stopped out. And so I looked at it and said, you know what? It's not going to work, but for now, but I would have probably, and it wouldn't have given me another opportunity actually to get in. But if it would have started to get back up in here and I thought it was a trend up type day setting up, I would have stepped back in. But I didn't, because it goes back to that position sizing questioning, right? Today I gave myself this look. Like, I thought the NASDAQ was the one that had the upside. I got the morning look I wanted. I stepped in bottom around 29 or 12,090 down, and I just continued to add in here clip by clip by clip. And then I scattered my stops below 1 standard deviation move, and I just got stopped out of them. I rotated out of some on the bounce just because I was just, watching the action of the market, but really I got stopped out with a full position. And so that's the way I played it. And once again, didn't work, pulled out, right? Now you can see the order flow has moved negative. The order flow VWAP has moved negative below it. So now it's setting up as a trend down type day. Still not touching it because I just think it's a mixed bag on the daily. That was kind of my summary of today.
Yeah, and so that brings me back to the original decision making, which was you looked at a daily chart, you saw that this one seemed to be the strongest of the 4 indices. Your bias is somewhat long, but now that it's switched, you're not saying, okay, well, let's switch with it, because it could be, like you said, a choppy day rather than a definitely, or I shouldn't say definitely, percentage wise, the probability, it's the bias is negative. Well, no, we don't think that, because we still have that daily chart telling us that, yeah, there's probably more upside to this.
It's just, we're back with mixed signals.
Right.
It's just tough. I mean, look, I wish I could tell you I have a clear view of what's going to happen here right now. I really don't. And I look at the markets and I go, look, at all I could do right now is take the looks I want. If they don't work, I roll out of it. Yesterday is the same thing. I came in the morning, took my first couple of good looks. Didn't work out, right? I mean, I actually made money in crude oil, which kind of offset my day in equities, but equities have been tough for me lately because of the situations, right? I mean, so when you look at the context of things, everybody, just to kind of recap, when you look at what's happening, we talk about first day of the month, last day of the month. These are all different, environments, right? We have such a changing environment in markets right now, from one day to the next, depending on what the data is. There's so many resets in a sense of what the market environment is. And it's just very, very challenging. I've been doing this a long time, and I know a lot of you have been doing it a long time, and some of you are very, very new. Always ask yourself these questions. Is it me? Is it the market environment, or is it my strategy? And when I look at it right now, what I'm doing right as a trader, even though I'm not making money currently, over the last week or so, it is all about me just taking that one loss and moving on. Because if I stay and try to be persistent and try to force things, even though some of these strategy signals I kind of like, I'd just be losing more money. And the environment itself, I know, is tough. So I have a tough environment and it's not reacting well to my strategy. So you got to be smart. And that's the one thing that's important. And one thing I want to say is before we go, I know we're about to run out of here. What I've been doing is, if you go to cmegroup.com and look for event contracts, this to me has been really a savior in a lot of ways. If you guys follow me on Twitter, if you follow me on the YouTube channel, I have a podcast entirely dedicated to talking about event contracts, which are daily options on these futures markets. And they're a great way to come in and still participate, but with a fixed amount of risk. So I really like these. If you're a new trader, you can go to placeyourtrades.com and see all of the content I put out on these. It's I'm not going to go into the whole thing about what they are right now, but they are basically daily options, $20 contracts with fixed amount of risk that you can participate in the direction of the market without having to worry about stops as much. You're just buying a daily option and you're picking the close. Do I think a close above a level or below a level? And so these, to me, in this environment, are a great tool for traders.
Yeah, great. No, that's great messaging there. We've started to introduce our bookend show audiences to event contracts, and one thing that Jim and I are toying with is using them as a guide, what does the event contracts what do the event contracts participants think about the market, and maybe help us in our trading. You can kind of look at these two markets and maybe use one to help the other. So that's great news. I do want to remind everybody, if you have questions for Anthony, send them to on Twitter. You can use Twitter and use the hashtag AskDYE, develop your edge, AskDYE, and then the handle at NinjaTrader, and we'll take a look. And if we use your question on air, we'll be sending you a little bit of a thank you in the mail. And thank you to Diego for contributing the question this week. Anthony, anything else to add?
No, that's it for today, everybody. Everybody talks about being patient and being disciplined. It all sets up with your homework. Know what you're looking for in these markets. Understand the context of the situation right now, because it is a difficult environment and you don't have to force it. And I'll probably say this again a bunch as we go forward between now and the end of the year. And several years ago, I put this out on Twitter and I said, give yourself the gift of time this Christmas as a trader, because you don't want to ruin Christmas. I've been there, I've done it. And you want to be able to stay in the game through the holidays into next year, because this is the type of market that I'll see a lot of people blowing up their accounts. Don't be one of those people. You could always follow me on Twitter at Anthony Crudelli. Go to anthonycrudelli.com. And if you're interested in those event contracts, go to placeyourtrades.com.
Awesome. Words of wisdom to live by. I love it. Thank you so much, Anthony. Thanks to you, viewers. We do have a show this afternoon. We will have bars closing. But in the meantime, Anthony, we'll see you in a week. And thanks for everybody for joining. Have a great trading day.
See ya.